The PSEi is on a 4-week losing streak and has broken through a very strong support level. Are we headed lower in the coming days? Let's discuss. My name's Dan Slim and welcome to another episode of Monday Market Outlook. Philippine interest rates remained unchanged at 6.25 following the BSP meeting last week. This was non-news, especially after the disappointing GDP results, as a rise in interest rates would hurt the economy, and I don't think that the government is really keen on doing that. But as US interest rates continue to climb up, we see the peso continue to weaken against the dollar. It went down to a low of 56.95 before settling back to 56.14. Now, with US interest rates continuing to go up, this could be a temporary pullback as our next resistance is here in a consolidation area at 57.50. Now, looking at the September Fed probabilities, while we have an 88.5% chance of a rate pause this September, the November 1 probabilities are a different story, where we see a 57% chance of a rate hike. This compared to a day before at only 38%. So the odds of a rate hike in November has dramatically increased. And this could put more pressure on the peso in the coming months. Meanwhile, a quick look at oil prices. It hit the highs at 85 per barrel, settling back at 81.36. Support held at 79 and we're on our way back to 82. If this continues, we could be headed towards 92.35, especially heading into the winter months. As a result, the Civil Aeronautics Board has raised the fuel surcharge for September 1 to 30. And as we monitor oil prices, we could see further increases in the coming months. Now, speaking of disappointing GDP results, the 4.3 miss on GDP growth rate has of course spurred some downgrades. We are now looking at a 4.8% projection down from 5.3 and a 5.2 projection down from 5.5 from HSBC and Nomura respectively. This is the thing with setting high expectations. If you set the bar too high, you might be setting yourself up for disappointment. Unlike other countries where expectations were set low, or I would say managed well, like Japan, where GDP growth rate came in at 1.5%, which is a surprise, considering the expectations were only at 0.8%, putting the full year growth for GDP at 6%. Not only that, we have surprisingly even the US, where the Atlanta Fed has raised the GDP forecast to 6% for the third quarter. But that optimism may be short-lived as the China Evergrande crisis continues, with Evergrande filing for Chapter 15 bankruptcy. This could have significant ripple effects on the global economy as construction accounts for 30% of China's GDP. Looking at the property seasonality charts for China, we are anticipating a spike later in the year, which represents government stimulus. Traditionally, China's Politburo meets in July, and the expected stimulus later this year may not happen, and instead, China may look into instituting policy measures that may be more effective, given that this problem might actually be systemic. So let's look at the PSEi charts. The index is down for the fourth straight week, with the PSEi index closing last Friday at 6,290. Unfortunately, this strong support at 6,375 did not hold, and we have to look at 6,250 as the next level of support. At this point, we have to assume that any rallies of 6,250 will most likely be met with sell demand, especially here at 6,375, where it's now acting as resistance. A breach of 6,250 will put us on the path towards 6,150. Now, looking at the weeklies, we can see a strong candle here where it broke support, which indicates further downward momentum, and we could easily follow what happened last year, where the PSEi went down and consolidated at 6,150. If we look at the hourlies, we can clearly see distribution happening here, before the market started to sell off. At the start of the seasonally weak month of August, we have a couple of rebalancing activity here. And as we draw a trend channel here, right? We could potentially see the market go down and follow this trend channel and then do a bounce at this level. Now, in the meantime, let's go back to the dailies and look at the property sector. Here we have Ali at a potentially good take profit zone. From the bottom here, it's now up 31%. So maybe top slice a bit here and see where it goes. SMPH is at a very interesting level here. If this support level holds, this could be a good entry for SMPH. Now, going back to the 1-hour charts, we can see a consolidation happening here. Could this be accumulation or could this be distribution? We could still be seeing pressure on the property sector, especially with SM having exposure in the China markets. So we also have to be wary of that. Overall, we will just have to reiterate for investors to be patient and wait for better indicators. If you are in the red on some of your positions in your portfolio, this is actually the worst time for you to be selling those stocks. In the meantime, let's monitor the markets together, and would appreciate a thumbs up on the video and would really also appreciate if you subscribe to the channel. Now on to global news. Retail numbers last week came in hotter than expected, along with the manufacturing index with an expansion instead of a decline. The strong retail sales numbers were boosted by growth in auto, online spending, sporting goods, and food-related spending for July. With the economy still running hot, the Fed is still maintaining rates at elevated levels, and as mentioned earlier, we could see a possible rate hike this November. But with the strong numbers, this has also prompted the Fed and economists to project economic growth instead of a recession for this year. Could this just mean that the recession is delayed for the next year instead? Looking at the S&P 500, the S&P 500 settled right smack into our maximum pain level at 4,368. At the start of the week, max pain was at 438, and it went down further to 435 as we concluded the third week options expirations. So the market ended right where it wanted to be. Now at this point, if we turn on the moving averages, not only has the S&P 500 broken through the 20-day EMAs, it has also broken through the 50-day EMA and is currently challenging the 100-day EMA. If we look at the weekly charts, we can see the reversion to the mean happening at this point. Now, the sell-off last week was triggered by a rally in US long-term rates with the 10-year, the 20-year, and the 30-year government bond rates rallying to uncharted territories. Now, if there's anything the market hates, it's the fear of the unknown. We are very close to a level beyond previous highs for quite a long time. Remember that these highs last October also coincides with the bottoms that we experienced last year on the S&P 500. So we have to keep a close watch over the bond yields in the coming weeks. Now looking at the options expirations for next week, we can see that there's an extraordinary amount of puts coming into the system with the put-call ratio at 3.01. with maximum pain now sitting at 443. Going back to the charts, let's go to the dailies. We could see the markets probably bounce back from this level up to 443. Could we also see long-term bond yields hitting resistance and eventually retrace, which could pave the way for the markets to rebound next week? Going back to the seasonality charts, we could see a potential double bottom where the first bottom may have happened last Friday and a potential spike before we hit another bottom in September. Now, looking at the investor sentiment survey, we can see bullish sentiment retreat to 35.9, down from a high just last month at 51.4. If we look at money flows, we can see institutions with a massive sell-off for quite some time now. Looking at next week's earnings, Nvidia is on top and could dictate how the AI-led rally in the S&P 500 so far will pan out for the rest of the year. Nvidia has led the AI craze, and this would be one of the most anticipated earnings call this season, with investors asking the question, is the AI hype over or does it still have legs? Looking at the implied movement next week, depending on how Nvidia reports at the close of market on Wednesday, we could see a 12% move either to the upside or to the downside, and this could have ripple effects on stocks that have been riding on the AI hype. Now, looking at the Nvidia chart, we could see significant buy demand happening at the 400 level. Could investors have advanced knowledge of Nvidia's earnings and are starting to scoop up shares in anticipation for next week's earnings call? So, we'll see. But for now, that's it for this week. I hope you enjoyed this episode. Please like this video, subscribe to the channel, and again, good luck on your trades, manage your risk accordingly, and I'll see you again next week.